Welcome to Construction Genius. My guest today is Levi Benkert. He is the founder of Harbor Capital, a hyper-focused industrial real estate investment firm out of Texas. They are deep into the key markets in Texas. And the reason I have Levi on for the second time on Construction Genius is because he is an optimist, and I am not. And we talk about why he is optimistic about the current state of the economy and the future of the United States and the Texas market particularly. This will be interesting for you because it'll give you some insights into how you can maintain your optimism through turbulent times, as well as how you should be looking at the construction market as it pertains to the work that you're focused on, how to niche, how to be hyper-focused, and why that can have a tremendous impact upon your company. You're going to enjoy this conversation today. Levi's super smart. And like I said, he's optimistic, and that helps me in my perspective as well. So feel free to share this interview with other people who you think would benefit from hearing it. Check out Levi's website, harborcap.com. Connect with him on Twitter as well, and enjoy my conversation. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. Levi, welcome back to Construction Genius.
Thank you. Excited to be back. It's fun to get a second invite. I felt very honored. Thank you.
You know, the reason I had you on is because I follow you on Twitter. I enjoy your posts, and I personally am not an optimist. I'm always waiting for the other shoe to drop. And I read your Q3 update from Harbor Capital and your sort of an outlook, and I was just sort of 2x4'd by your optimism. So I had to have you on the podcast I just to get that great alternative perspective. So here we go.
That's funny.
Why are you not betting against America?
Gosh, that's a good one. I think I need to temper it a bit. I feel we got into a good deal of irrational exuberance that was artificially low interest rate fueled. We were putting, as an economy, I'll kind of dive into that fuel analogy a little bit more and probably burn it out here, but we were putting jet fuel in a car that wasn't quite ready for it or wasn't made for it. And so the amount of borrowing, construction, growth got optimistic. And this was all, obviously everyone knows this, but this was a big, kind of Fed-induced attempt to avoid a catastrophe like we'd never seen before from COVID. And we certainly overcorrected to the wrong side. And I don't think any particular political party or administration is to blame. I think this just, this has happened all over the world, and inflation is not an American problem. But what I do think is that the deeper I get into the weeds on the facts and figures of what's happening, the more I see that America is actually doing a better job than many other developed or developing countries around the world at getting things under control. And so I mentioned in the update, while the neighbors are keeping the lights on and the music going down the street, I think I said that our Fed is choosing to send everybody home, turn the music off, and take the underwear off the fan, and start kind of cleaning up and getting things back in order, because the party, while it may have been fun, it was getting out of hand and certainly going to not end well. And so I think our, when you zoom out to the big picture, it's hard not to be optimistic about America and the fact that we, just one simple fact alone, we're taking care of business when it needs to be taken care of. And that's why the dollar is as strong as it is. It's the second highest point in history.
Yeah.
relative to
There's
other
a couple of
currencies.
points. There's a couple of points that you bring up in your update that I think we tend to miss on at times. And I just want to explore those with you a little bit. And the reason why these are so important is because they exist regardless of what we do. And the first one is our geography. And then the second one is
Yes.
our natural resources. Can you explore that? Because I think that's fundamental when we're thinking about America, and we miss that at times.
Oh, we consistently miss it. I recently read a book it's called The End of the World is Just the Beginning, which talks about these kind of macro geographic, economic, demographic trends around the world, and paints a picture of why America is kind of uniquely positioned and has been. And I think we kind of take it for granted and think that, we had this great constitution or these founding fathers or this political system or, whatever, the right people happened to immigrate with the right work ethic, and that created this kind of boom that the world hadn't seen, and it's all the people. Where in reality, you've got ports on three sides, more arable land than any other country in the world, energy independence kind of when we want it. It's certainly not, always something that we do, but it's very easy to do. And I think, at this point, we are actually energy independent. Thankfully, we're not importing, but we had been for years. But the fact that there's so much kind of natural resource to utilize means that America's just situated extremely well compared to the rest of the world. You look at other countries that are really unable to stand alone without the shipping and imports and expertise and knowledge of other countries. Where America, literally, we could. It would be painful, but not nearly as painful as someone else. We could just close off our borders and do our own thing if we wanted to.
Right.
And we don't need globalization like other countries do.
It's so interesting because as you're talking about this, I think about, that old cliche that, this guy was born on third base and thought he hit a triple or something like that. And, in America, we can have that. And as we go through the cycles, the booms and the busts, we're at the point in the boom where there's guys and gals who've launched businesses, whether in construction or in investing or whatever the case is, where all they've known is boom. And so they feel a certain sense of, I think arrogance, and I don't mean that too harshly, but it can be like, well, I've never had the bad times. So, I don't know what they mean.
It must be me, right? I'm the only reason that this is done so well. What else could it be?
Yeah. So then, what are your? Because I know you've been doing this for a while. So what are your? And you went through 08 and that sucked. So what are your prior experiences? How are they informing the way that you are proceeding, like right now at this moment? And we're recording this in early November 2022.
Yeah, I recognize that one of the differences this time around is that I have the benefit of hindsight of having lived through 08, which shaped and informed the investing strategies that I have put together, and all of the kind of personal net worth and other people's money that I manage. And I own $120 million worth of industrial real estate in Texas, and am growing that right now. I would be shaking in my boots and very scared if I didn't have the structure set up and in place that is a direct result of having lived through 2008 and watched an enormous amount of wealth fall through my fingers and an enormous amount of investor wealth just evaporate when the market just stopped immediately. And so this time around, I've got very conservative debt to income ratios across the whole portfolio. I've got low loan to value ratios. I have properties that are flexible and could be rented out to a number of tenants. I have the ability to drop rents drastically and still cover overheads on each individual property. These structures kind of allow for a lot of flexibility, and that that just puts me in a different position. That's not to say that we won't have, I'm not trying to sit here and kind of claim that the future isn't going to be ugly for America for a little while.
Yeah.
But even when you put into consideration, when you kind of zoom out and put into perspective, 2008, sure, we made some mistakes, things went bad, but it wasn't this complete catastrophe, Great Recession of the 1930s. It is something entirely different. It's just this little blip on a long journey upward. Yeah.
In your mind, and you may not be able to answer this in general, but in your mind, what is a prudent income to debt ratio that a company should be looking at as they're running their business? And you may only be able to speak for your business specifically, but do you have any opinions on that or perspectives?
Yeah, I mean, I think about that a lot, not from a company perspective, but from a particular asset. And so, as we've said, I buy industrial properties only. If I've got a multi-tenant property with a bunch of small units in it, I feel much more comfortable being a little bit more levered. If I've got a single tenant property that, even if it's rented to a publicly traded company or something, that company might go under, and you've got you go from 100% occupied to 0% occupied in a 24-hour period, I feel much more cautious and careful in the structures that need to be put together. And I think the same applies across each individual business. I mean, how exposed are you and how honest are you being about that kind of exposure that you have? We call it a pre-mortem meeting around the office whenever we're talking about acquiring a property. And sometimes we do it on properties that we own, where we basically go through and say, it's 12 months from now, this property has completely failed and is going into foreclosure. What happened? And the power of that question to spur you to immediately hone in or zoom in on the problems or the issues that could exist, and then start to think creatively about what solutions could we create, kind of what hedges could we buy that would enable it to be not as bad as the kind of worst case catastrophe. It's fantastic.
Okay, so let me ask you about that pre-mortem meeting. That's kind of an interesting one. What are some typical themes that come up that reoccur in terms of the worst case scenarios? And, if it hits the fan, what's it going to look like?
Particularly, when we're talking about a property, if it's a property in an area that is highly concentrated in one single market, oil, natural gas, a certain type of manufacturing, auto, something in that particular market gets hit, then you might have a vacancy, but you might have a vacancy at the same time that 9 other properties in the same neighborhood went vacant, which means the amount that you could rent it for goes down drastically. And so it's all just a function of supply and demand, and what causes, A, what causes us to lose our income, and B, what potential causes exist and how might they affect the market as a whole. That's my worst nightmare, is that I own something that all of a sudden has zero income and expenses. Almost always the answer is, when we're buying a property, let's raise a bigger reserve fund, because I want, and just put it in the bank. I mean, we have tens of millions of dollars worth of reserve funds just held in CDs earning low interest, because these properties something bad might happen. And I would rather lower my investors' IRR and sit on a bunch of money that we could use for a rainy day if and when needed, than give them a higher IRR and know that we kind of have no plan B when the rains come that are inevitably going to come.
That's interesting, because that goes to something that you stated in this recent update. The future is unknowable, yet history teaches us that those with the biggest moat and the highest walls last the longest. And it sounds like, from what you're saying, the moat that you're developing is a combination of cash reserves and diversification. Did I hear that right?
Cash reserves, flexibility is really important. I want a building that could rent to different sectors at different times. I love a building that can be split up into smaller units if needed to. It could be rented to a gymnastics facility or a oil machine shop, parts manufacturing, or auto body shop. I want kind of all of the above whenever possible. and we want high demand and low inventory. I mean, you just don't want a lot of potential other inventory. The other moat that's there is going in cost. I want to buy for less than it would cost to replace, so that if and when a neighbor decides to build a mirror facility to mine, they can't afford to rent it for as cheap as I can.
Interesting. So that requires a lot of thought and upfront work in order to be able to identify those types of properties. And then it seems like, what are the main ways that you have to discipline yourself in your business so that you don't, what are the main temptations to violate these principles that you have in your business?
I mean, those temptations are enormous, because we see properties all the time pitched to us that in kind of layman's eyes look to be a great investment, well located, whatever else, but the price is too high, and it would be easy to go in and put together a pitch deck that said, you know what, this price is higher, but we're okay with it because of these reasons. And the fees keep coming in, and you look good for a while. You can kind of bury, I used to, years ago, I did home remodeling, and I had a tile guy that used to say grout covers up a multitude of sins. I feel like you could quite easily do that in this industry. Just put together a fancy looking pitch deck, and you're going to buy the deal, and no one's going to know kind of the things that you've buried beneath the surface for sometimes a year or 2, 3 years down the road. And you kind of, quote unquote, live to see another day, but you're really creating something unsustainable, which, I started this business when I was 40, 2 years ago, and had this kind of big moment in life where it was like, I want to build something substantial, something that lasts. When I looked back over my career, I'd done a number of, large businesses and built some fantastic things that I'm proud of, many of which that are still going today, and, proud of what's happened. But it felt like a lot of tall towers with questionable foundations. And this time around, to me, it was like, there was this maturity that came with age that enabled me to say, the foundation is actually more important than what people see coming out of the ground. And so I want to build something that can stand the test of time, regardless of what the market, what gets thrown at us.
Let me ask you, in your business, and the folks who are listening to this, they're not directly in your business, they're in construction, but in your business, how do you balance the objective aspects of analyzing a deal with the intuitive aspects that enable you or someone in your business to see things that other people don't see, and because of that, they're able to make deals or get properties or put things together that other people can't because of that intuition? Is that a reality, or is that just, look at the data, go by the data, don't trust anything else?
Yeah, I don't know that it's intuition as much as just understanding you've got to focus on a niche within a niche within a niche in order to get really good at something. Maybe I'm not built like some other people are, but when I look at what Amazon and Jeff Bezos has built, to me it seems like just vast and kind of disparate empire of businesses that they're in. I'm appalled and amazed, and maybe I'm just not as smart as the rest, and I'm kind of a dumb guy. But I found, for me, in order to be successful, I need to focus, kind of deeply in one specific topic in order to make it, to become the expert at it, and to pattern match and create a set of heuristics that I can rely on and trust.
I think that's interesting you say that about Amazon, because when you said that, what popped into my head is what Amazon niches on is the customer. And I know that's, we all say that, the customer's the king or whatever, but really that's what they do, is they are ferocious in just niching on what is this customer, what do our customers want, and then just going after that. So let me just pivot here a little bit. You're in Texas. And are you buying and managing properties throughout all of Texas, or is there a particular geography that you're focused on within Texas?
So only Houston, San Antonio, Austin, Dallas, and in that order in terms of our holdings and focus.
Okay, so Houston, San Antonio, Austin, Dallas.
That's right.
Okay.
Which is, I mean, again, another. You talk about born on third base.
Yeah, right.
America was certainly born on third base, and Texas was to an even further extent. The synergy between these economies and the specialization that they have is just mind blowing. The deeper you get into it, I mean, Dallas is this incredible financial hub that has banks and not to mention then the shipping and technology that they have of automation. I mean, it's just one of the kind of world's leading cities in a number of different areas. And then you go over to Houston, and it's the largest port in America by dollar volume. Primarily because it ships so much oil in and out for those refineries there. It's the second largest hub of Fortune 500 company headquarters in the world. Incredibly diverse population, cheap land. It kind of goes on for miles. I mean, it takes you an hour and a half to get from one end to the other of Houston. And then Austin is this little mini Silicon Valley. San Antonio has even lower cost of living than Texas as a whole. And these three I'm kind of looping Austin and San Antonio in together, although they're very vastly different. They just happen to be, only 40 minutes from each other. But you have this kind of synergy between these four hubs that, I mean, if America could cut off from the rest of the world, Texas almost could do the same, because there's just so much happening here, and kind of all of these things work together. It's what, sadly, many countries learned in the kind of 1700s when they started colonizing is that they needed those resources and cheap labor and things that they were able to go and get. Tragically from other countries, kind of all exists here, where there's these different variabilities in cost of living and focus and expertise that creates a synergy that's kind of unparalleled. I just don't know of anywhere else in America or in the world where that exists.
I really appreciate that summary of Texas, by the way. That's pretty cool.
Yeah.
With that in mind, what is the feeling on the ground in your markets regarding construction in the next 12 to 18 months?
There's certainly a pullback. I'll speak specifically to industrial, because that's what I know best, although certainly keep an eye on residential and other types of construction. But industrial has pulled back. Oddly, it's at a time when vacancies are still extremely low and new leases are low, new leasing activity is still high. And so in my mind, they may be pulling back a little prematurely, but I'm glad that they are, because it's certainly at this point looking to avoid kind of an oversupply. We always talk about I talked about it a minute ago, one of our moats is I like to own a building that's cheaper than my basis is lower than what it would cost for me to build that, or someone else to build that building down the street. So therefore I've got, kind of that as a moat. The problem with that thesis is if somebody builds a spec building down the street, sunk cost is irrelevant the day it's finished. If the market won't support the rents that they, quote unquote, need in order to earn a safe return, then they just have to lower prices. A vacant building is a vacant building. And so they, even if they have to cut their prices by 20%, the equity holders get wiped out and the bank has to own the property. Sometimes that's what has to happen. And in a down market, that's what has to happen. And so kind of there's no buffer that gets you away from the realities of an overbuilt market. Yep. And cheap debt is what leads to overbuilt markets.
Yep. So with that in mind,
that's what we've had, and I'm so thankful we're getting rid of.
Yeah, that's okay. So then, higher interest rates are here. How long they'll last is remains to be seen. We don't know the future, but how are higher interest rates impacting your investment strategy?
We're looking a lot less at buy and hold stabilized core assets and focusing more on value add opportunities, buy vacant, buy under leased, buy and repurpose. Sometimes we'll split a property up into a bunch of units that was bigger. We look at ways to add value and go even more kind of significantly into that value add bucket. We bought a building recently, just closed on it last week. We bought it vacant, 135,000 square feet. We paid $10 million for it. We're in negotiations right now with two different tenants. Both want it, so we're thankfully have quite a bit of strong interest here. I think we'll have at least in the next month or two. This asset fully leased in this market will trade for $16 million or more, and we paid $10 million for it. We were the only bidders on it because it was kind of mismarketed. It wasn't necessarily, it wasn't a real experienced broker that kind of knew what the property was, and so it hit the market, and we jumped on it immediately because we knew the area, knew the building, knew the asset, knew the market. We knew what we could do with it, and so we were able to come in and secure this asset at a really low price.
Can I just interrupt you there?
Interest rates are entirely irrelevant, right? I don't care if I pay high interest or not. If I wasn't able to earn a 60% increase on my purchase price.
I think that actually answers my earlier question a little bit more about this idea of intuition, because you were able to spot a mismarketed property based on your understanding of the market that you were in, and therefore you were able to put two and two together, so to speak, and see a killer deal when it came up, and it didn't necessarily that was just something you could see. It sounds like is that right, or did that require additional analysis, or did you just, hey, I know that's a deal right there?
I mean, we knew that was a deal right there, but did still enormous additional analysis to make sure that we knew what we knew. With this property, we actually went and negotiated with the seller for the ability to list it for market during our escrow periods. We've been talking to tenants about it for a month prior to purchasing the asset, and we're able to figure out some tenant improvements that needed to be done so that we had all of our list ready to go and we had bids. And so literally the day after closing, we called the contractor and said, okay, we're pulling the trigger on option B that we've been discussing for the last month. This is what we need. We're adding roll-up doors and a few different improvements on it so that it would be even more ready to rent. I would say everybody always asks me to kind of predict the future, which the older I get, the less interested I am in doing that.
Totally.
I don't know what the future holds, but I do know that the more specialized you get, the more knowledge you have about a particular market, the more you can kind of hone that intuition and build those heuristics that are incredibly valuable.
Yep. Yeah, you had a quote in your newsletter or your quarterly Q3 summary from Terry Smith. There are only two types of people in the world when it comes to market timing: people who cannot do it and people who have realized that they cannot do it.
Right. I love that one.
How much blood do you have to shed before you get to that point, huh?
Oh gosh, yes. For me, it was unfortunately quite a bit, but yeah.
It's interesting. Another question I have is, so you see a property that's mismarketed and you take advantage of that, you get yourself a good deal. How do you build and maintain relationships with people who you may be working with long term when you know that you've gotten a killer deal and they may have made mistakes? Is that a challenge, or is that just something that you kind of stay humble about it so you're not like in their face with, dude, you blew it and I did well? Or how do you handle that? Help me there with that.
That's a good question. I mean, certainly stay humble, but we treat our brokers really well. We're thankful for everything they send to us. I mean, everyone in that instance, the seller was actually quite happy. He earned some good profit on the building. He bought it for even cheaper than we got it for, and was planning on putting his business in there, and ended up his business grew too quickly. And so all the tenant improvements he'd done added value to the building, and he walked away with quite a bit of profit.
There you go.
The broker earned a good commission, and we're thankful for kind of everybody and made sure to let them know that in that process. Yeah, I mean, I don't know. I'm probably a little bit more ruthless than the average buyer. I through the peak of the market, I saw people kind of touting that, we'll never retrade. And this is how you can do a deal with us. We're the kind of strong, reliable buyer that's going to, pay up kind of regardless of what we find during due diligence. And to me, I need to deliver. My investor is the customer, not the seller. I need to deliver a strong return to those investors. And if that means sometimes we're going to lose deals because we, went back and tried to retrade after we found that there was, some roof leaks or some issues that we didn't know about or were deceived about, or that maybe even sometimes the seller didn't know about, that's fine with me. I mean, during a kind of peak market, we're going to lose some deals, but at the end of the day, it only takes one really bad deal to ruin a reputation. And our reputation is what is the foundation of what we build upon. And so, I think that's a much more sustainable position to take as a buyer of real estate, is that they have to be a good deal. I'm sorry. It's just, we have to take care of our investors. We're not trying to take care of sellers. We're trying to take care of investors.
A couple of things I've heard you mention this a couple of times as we've been talking, Levi, and it reminds me of this negotiating mindset that I learned many years ago, and it's the willingness to walk away is more important than actually walking away. And you've mentioned a couple of times your willingness to lose deals or not to close on not to get too obsessed with the property and not to have to win, every single time, because you have a very clear idea of what it means to win, and you're not going to go outside of that framework.
Right. Yeah, it's interesting. I think the art of being kind of dispassionate or unemotionally involved is really important. And is a good kind of mentor / peer friend of mine that runs a very similar business out of Colorado. And he's kind of the king of I've learned a lot from him. He just gets honed in on the deal and doesn't, it's like the deal has to be this good for me to buy it. And he'll go back and negotiate. And the winners are his investors long term. And it's incredibly powerful tool to just, I don't care if this makes you think I'm dumb. We found something in the property that we didn't know was there, and I don't own the property yet. So I don't have to make you happy as a seller. I need to buy a good deal here. And right now this problem is yours. If you want to make it mine, you're going to have to make the price more attractive for me.
Yeah, that's great. And I just love that perspective that you have, that your investors are the customers.
Yeah.
That's excellent.
Yeah, you're saying that about Amazon made me think immediately to our customer is, and without a doubt, it's investors. I think investors and banks. I mean, our lender relationships are key. That was the thing that hit me the hardest in 2008 was banks that I was working with immediately. I mean, relationship banks, we want to work with you. We want to do more deals. We respect you. We're going to work out stuff. As soon as the music stopped, they call up and say, look, it's from the higher ups. We have to, we're out of compliance with our bank charter if we don't do something with this debt. So therefore, this loan that we've got with you is getting called. We're done. We're not lending anymore on construction projects. We're done.
Yeah.
So
just based on your perspective and an outsider, I mean, you're involved in the construction industry to a degree, but an outsider, what segments of construction based on macroeconomic trends do you see continuing to be strong as we go through the uncertainties of the next 12 to 18 months?
Yeah, I mean, I've heard this said about the stock market, and I think it applies really well to real estate as well. There is no real estate market. There is a market of real estate, meaning each individual property, or, in the case of the original quote, each individual stock is different. They have different characteristics. They have different risk profiles. They have different, potential issues that could come up and arise and could drag them down. I hate kind of thinking of real estate as a whole, or even a sector as a whole. I mean, a certain building might be full all throughout, full and well leased all throughout a downturn with not a scratch on the owner, where a neighboring building that maybe was right next to the train tracks or had some, kind of some negative for one reason or another, the owner might not be able to hang on to it and they've got to foreclose. And so I think a flight to quality is probably the best. If you're buying, you should buy quality at as low as possible prices. In terms of what will the market do? I mean, high interest rates, it's funny. We talk about these high interest rates. They're not high. They're
right.
Normal interest rates
right.
now. Low interest rates are what we should be talking about. Low interest rates were a nitrous oxide in the tank of the market that helped sustain us through what could have been one of the biggest economic catastrophes of our lifetime. Mm-hmm. And we kind of enjoyed it a little too much for too long.
Yep.
Which is leading to, I don't know what's going to happen, but so far the market is showing that it's leading to a swing the other way that's causing kind of a negative sentiment, a kind of downswing in the wrong direction. I mean, just take this into single family home ownership. If I want to buy a house today, I can afford a lot less house for the same monthly payment than I used to be able to afford. And that's, it's like the Fed just went and took the wallets of all the buyers and said, first of all, they went and stuffed cash in everyone's wallets for the last 2 years, 3 years. And then they went and took all that cash out of everybody's wallets at all the same time.
So it's interesting. Yeah. One thing that you said that I picked up on, and I think this could be a particular an insight into why you're optimistic, is because you had this idea of niching, and there's no real estate market. There's a market of real estate, and so because you understand your niche and you know how to identify properties that fit within that then helps you to maintain optimism because you know they're out there. And similarly for a construction company, as they understand their market, what they build well, where they can make money, they just need to be aggressive in making sure that they're focused on those properties, on those projects and those opportunities, and that will then enable them to sort of block out the general noise of pessimism, which pervades often in the media and just in the market in general, and focus on still building the right projects with the right people in the right locations.
Yeah. Have you ever gotten to know the Barnhart crane and rigging story?
No. Give us it.
Okay, so you need to go find this guy. Just incredible. Alan Barnhart, his name is the owner. They are just an enormous company now. I think they've bought 50 or 60 different crane and rigging companies all over the country and just keep expanding. I mean, they're in cities all over everywhere. I got to know Alan and his wife. They are just a really kind of passionate, driven people, but not for money. He realized early on that money was not what he was trying to do. He wanted to build jobs and opportunities. And so they set their salary that they would live on personally and decided that everything above and beyond that would be given to a foundation. So they set up a family foundation. They gave 100% of the stock of the company to that foundation. And they've ran this company now for 40 years and haven't stopped. They just live on the same amount of money, live in the same house that they lived in when they first got married. Kind of an interesting, maybe even a little too extreme in that. I'm not quite sure I totally agree with that, but it's interesting.
Let's upgrade the house.
Yeah, exactly. Maybe a little bit. I mean, at this point, I think the business is probably worth a couple $100 million. I mean, it's an enormous business. But his concepts about being cautious about debt and becoming a specialist in a certain area, they have over 200 engineers. If I'm remembering this correctly, I went and actually toured his facility with him. They had 200 plus engineers on the team, had these just hyper specialized. They were able to move enormous, oil rigging equipment. If something needs to be moved from point A to point B, sometimes it's a year-long process. Something really complicated, it's a year-long process to figure out how to do it, and they could become really, really, really good at that.
Huh.
You talk about a niche within a niche. I mean, it's hard to comprehend the things that they're able to move and make happened, but then also just the mindset that he's put throughout that company, and the kind of just careful, cautious. I don't think they've ever used any debt, and have kind of just grown steady throughout the years. And every time the market dips, they go buy 3 or 4 of their competitors, and they've become one of the largest, if not the largest, in America now.
That's beautiful.
And they just keep growing. It's fantastic. Yeah, you need to look up Alan Barnhart's name is.
Yeah, I pulled up the website here. That's pretty cool. So as we're wrapping up here, Levi, I kicked it off by saying, I'm naturally a pessimist, and my views get confirmed very much so when I'm on social media or surfing the internet. How do you have any strategies yourself in terms of what you're consuming information wise that help you to maintain what I view, at least, as a healthy optimism?
I don't do as good as I want to in that regard, but I do always. My main kind of media consumption is timeless, books and articles and things that are not just about what happened today, politics and kind of the immediacy. I'm reading Mastering the Market Cycle by Howard Marks, which is a phenomenal book right now. And I find that those kind of bigger zoomed out perspectives help me quite a bit. I place an extremely high value on sleeping well at night, and I find that the more, not that I don't do it, but the more kind of immediate media, day-to-day news that I consume, the less I sleep well at night, and the more I feel like the sky is falling. The more I zoom out and look at kind of, the market that I'm in America, and the stability that we've created through the foundation, the deep foundation that we built into the company, the more kind of I can overlook these. I can look out on the horizon and these bumps and things. I realize I've built a vehicle with a suspension system to be able to handle it, and so this is okay.
That's awesome. Having those ratios in mind that we discussed earlier, I'm sure, is very helpful for your sleep as well.
Yeah, certainly.
Just tell me, just go back to that Mastering the Market Cycle book. Just give us one takeaway or 2 takeaways that you're getting as you're going through the book right now, if you wouldn't mind.
Yeah, he talks about this, and this is not a concept that he created, but it's certainly one that is helpful and timely right now. This concept of, you go back and zoom out on the value of equities, and he includes real estate, stocks, and everything in this. You look at them over a 100-year trend, and it's up and to the right with these kind of gyrations and swings. But if you level that out, it's a straight line. Of course, it just is. It's, from point A to point B. And he talks about that line carries some gravity with it to the reversion to the mean, but that doesn't mean we're not going to do this up along the way,
right?
And that's to be expected, and it's how very rarely the market hits the mean or hits the average. We'll have a couple of years where we're extremely, like we're going through right now, we're extremely off to the negative of the average. And then a couple of years, we're extremely high to the positive of the average. And I just zoom out, I think is the theme that I get from that. Howard Marks is fantastic. His quarterly updates are some of the best, just market analysis and thoughtful, contemplative dialogue.
That's excellent.
It's great.
Well, Levi, I appreciate you coming on. I get refreshed by people who are optimistic. I'm always amazed when I hear it in the tone of their voice, and it's super helpful to me. Give us a reminder here of how people can get a hold of you and what you're all about here, please.
Yeah, harborcap.com is our website. Harbor Capital. We are buying industrial in Texas and continue to do so. We are net buyers, even though we've had a couple of opportunistic sales that we will continue to do here and then. We believe long term in the value of this real estate and what the state is doing here, and so we're adding more to the portfolio. I'm on Twitter at Levi James here is my handle on there, and kind of often get on there and talk about industrial real estate. So.
Awesome. We'll link in the show notes to your website. We'll link in the show notes to your Twitter handle. And Levi, it's been a pleasure. Thanks so much for coming on Construction Genius today.
Yeah, thanks, Eric.
Hey, this is Eric. Thank you for listening again to Construction Genius. I hope you enjoyed my chat with Levi. I know that I did. And before you bounce away, I want to encourage you to go to one website, that is harborcap.com, and check out what he does. And then go to one other website, and that is constructiongeniusbook.com. Yes, indeed. The Construction Genius book is live. It is flying off the shelves, and it is the one book that every construction leader must read. And the reason why is because people problems are costing your construction company millions. And in Construction Genius, the book, we talk specifically about how to solve them. So if you want to learn how to lead, how to strategize, how to sell, and how to be successful in the construction industry, this is the book you must read, and it is the book for all construction leaders. So go to constructiongeniusbook.com, click on the Buy Now button, and go out to Amazon and get yourself a Kindle version or a paperback version, a hardcover version, or the Audible version. Yes, indeed. We are across all of those platforms. It's a killer deal. For about $20, you can get a book that could make you millions if you use and apply the principles that you learn. You can tell I'm pretty pumped up about the book, and I know you'll enjoy it. So go check it out. Thank you for listening to Construction Genius, and we'll catch you on the next episode.